What's up, guys? It's Amma Jamma here, and I am going to go over order blocks. I'll do, I think coin will be a good chart for this. It might not be. I should have probably picked a chart ahead of time, but we'll do coin. All right. And this is kind of the ICT strategy for order blocks, guys. There's 900 different ways that people denote order blocks in general, how they play them, what they're called, what they mean, so on and so forth. All right. Here's a couple key things about order blocks. All right. You can never, first of all, two key rules. Bullish order blocks are built on red candles, and bearish order blocks are built on green candles. First of all, rule one. All right. All right. So what is an order block? I'll tell you. And I don't know if this is going to be a great chart for this. I need to find a chart for some really good volatility. Clean moves. Let me get a good here. You know what? This might be a good one. All right. We'll use this one. Let me delete everything on my chart. Goodbye, everything on my hood chart. All right. So order blocks. A couple rules, too. Always remember this specific rule when it comes to trading. What's your primary purpose in the trading? Are we going to want to identify order blocks on a 15-minute time frame for long-term positions? No. Are we going to want to identify order blocks on a weekly time frame for day trading? No. Do they matter? Absolutely. But do we necessarily need those in that fashion? No. And another thing we need to remember is the longer the trend, the stronger the trend. So order blocks on a monthly chart and a weekly chart are always going to be more strong than an order block on a 4-hour chart or a 1-hour chart. So I'm sitting on the weekly chart on Hood. All right. And let's start up here because this was some pretty nice sell-off here. All right. So how do we denote what an order block is? And I'm going to make this red. You probably can't even see this red. It's very light. Let me make my colors different because colors matter here and wicks do not. We don't need wicks. Wicks don't matter. Ignore wicks when it comes to order blocks. All right. Is this better, guys? The darker? Is it more of a able to be seen? Okay, so order blocks. All right. What we're looking for when it comes to order blocks is engulfing candles superseding the previous move. It doesn't have to happen in one candle. It can happen in 2 candles, in 3 candles, in 4 candles. But what we need is for example, right here, for a bearish order block. All right, we're looking at green candles for bearish order blocks, and we're looking at red candles for bullish order blocks. So we've got this white candle right here where we started to try to push up. Okay, we can start right here on this candle. We had this white candle start to push up, and we're only talking about bodies here. As soon as we get an engulfing opposite color candle from the previous candle, which would be this, you can see how let me make these white so it's not the same color. Okay, you can see how this candle engulfed this candle. All right, what does that mean? That means this right here is a bearish order block. All right. And let me make these better, and then I'll explain the how and the why. So this one's bearish, red. There we go. All right, so we get bearish order blocks when the candle following it, when the preceding candle was bullish for bearish order blocks. All right, I'm going to type this up. Bearish order blocks. When the current red candle engulfs preceding green candle. And then note, it can take than one candle. All right, so that's bearish order blocks. Let me switch that red because it's bearish. And then the first question I get on one-on-ones, everything else is, well, what about when there's more than one? So in this area here, we're on this weekly time frame. We've established there's a bearish order block. All right. But wait, Amy, doesn't this become a bearish order block too when right here we've got a green candle right here, okay? And then we engulf it by here. So doesn't that make this an order block as well? And then how do we handle order blocks that stack on top of each other like that? It gets confusing. Like, is there going to be 9,553,000 order blocks on a chart? All right. When you start to get to that area and it is a longer term type setup like we're talking about, switch to a longer time frame. Go up one time frame to the monthly. And then figure it out. So, okay, on the monthly, that makes sense. This order block is nil because the candle body's here, and this order block is nil. But we actually have this order block here, okay? That's the actual monthly order block. All right, cool. There's our order block. Another second thing about order blocks, middle line matters. So if you go to your settings on your rectangles, middle line, see? You want that middle line. That is incredibly important to order blocks. All right, so there's an order block right there. This is a bearish order block. All right, what does that mean? That this is a bearish order block. It means that we're going to have resistance there. That is a major structural area where the bears came in and there's order blocks sitting there. There's bearish order blocks sitting there, okay? For bullish, it's the exact opposite, all right? And here's another thing that's very important about bearish and bullish order blocks. When we're downtrending, there is never, listen closely to this, there is never going to be bearish order blocks above our head. Excuse me. There is never going to be bearish order blocks below us and bullish order blocks above us. What does that mean? That means for a bullish order block, all right, if we had a bullish order block right here, okay, so right here, we have a bullish order block, all right? If we put on the monthly chart, we can see we have this candle here. Oh, excuse me, right here. We have this candle here. All right. And then, hold on a second. Where is a bullish order? Do we even have any bullish order blocks? Red candle. Okay, yeah. So this is a bullish order block right here. All right. As we can see, this candle, we're not using wicks, just body. Here to here is a bullish order block. Okay. Let's turn it green. That's a bullish order block. And that is still active because we never had a candle close below it. Body of a candle close below it. So technically this order block is still active. All right. However, we do have more order blocks here. This is actually a really bad chart for this. So I'm trying to find, because it's all just very, so as far as just identifying the order blocks first, let me slow down. We'll do that first. So that's a bullish order block. This is a bearish order block. We have engulfing candles opposite color. Here's another bullish order block. We have a red candle here, which the candle's going to be red if it's a bullish order block. And then we had a bullish candle engulf it. So here's another bullish order block right here. All right. That's both order. Those are both bullish order blocks. All right. But what happens is, if we were to rewind and delete these overall, all right. And right here, we had a bearish order block. Okay. Right here, we have a bullish candle and then a red candle that overtakes it. So technically, wouldn't this be a bearish order block? Right here, because we sold off bearish. No. All right. As soon as we invalidate an order block bearish, which technically didn't even happen until right here, this candle, this most previous candle. This one. Once we have whatever time frame we're looking at, we're playing the monthly right now. Once we have a monthly close above it, delete it. It's done. The order block is wiped out. So we're not stacking bearish on top of bullish, on top of bearish, on top of bullish. Wherever we are on the chart bullish, which is right here, we will not have any order blocks. There is no bearish order blocks below here. They're all gone. There's nothing left. And just like there is no bullish order blocks above where we are right now. Does that make sense? The order blocks can only be bullish below it. All right? And can only be bearish above it. I hope that makes sense. And if anyone's following along, does that part at least make sense? Because this is a complex topic. And this is kind of the ICT strategy. Full disclosure, this is the ICT order block strategy. There's many different ways people denote order blocks. All right? So if it means we can only have bullish order blocks below it, where are our order blocks? Our order blocks are going to be our major levels of support for our bullish time frame. All right, so obviously our major levels that we have support and where we had these bullish order blocks are here. We've got one here, obviously, because we have the red candle. Remember, bullish order blocks are only drawn according to red candles, not the green candle, the red candle. The green candle is what creates it. The red candle is the idea of where. All right, here's a massive bullish order block right here. We engulfed it here. Okay. And then right here. But these two are kind of on top of each other. So that kind of invalidates it because we have it right here. So, and we don't want to confuse ourselves. We don't need order blocks stacked on top of order blocks, stacked on top of order blocks. This previous order block that was here, once we create a new one in the same area, that's the one we give a shit about. And we always want to use a higher time frame. If we put this on the weekly time frame, all right, we can see how, if we delete this and we're trying to do order blocks here, and we've got this whole area is just order block after order block. Okay, we engulf this one and then we engulf this one. Instead, switch it to a higher time frame. Go to the monthly, go to the whatever time frame it needs to be, and then identify those order blocks. So on our monthly chart, these are the order blocks we're looking at. And what does that mean? All right, this is what it means. So for one very important thing about order blocks that I really want you guys to realize is the following. This bullish order block we're personally in right now is not invalidated until we are down in this area here. When we have whatever monthly, we're on a monthly time frame, so the monthly candle needs to close below it. All right? And then it gets invalidated. What matters about that 50% retracement line is the following. If right now we were to continue through, we're going to expect, first of all, we're going to expect support there. We're going to expect support at the midline, the mean, and we're going to expect support there. All right, so say we come down, we close our monthly below this. Then our algorithm, our fib starts to come into play, our standard deviation trading. This mean, all right? So what happens with these order blocks, and this is what's so important about it, even though the order block's invalidated, all right, when we have that monthly close, standard math and standard deviations tell us much of the time, we are going to come back to that mean, the middle line. All right. I wish I could make it thicker. Maybe I can. Yes, I can. We're going to come back to that middle line for the test and then continue down and then have that rejection and continue our downtrend. That's just simple standard deviation trading. Okay. So as far as invalidating our order blocks on the bullish side. So here we have, this used to be an order block. Okay. So if we were to kind of rewind here, this was a bearish order block right here. All right, we had that red engulfing candle of our white candle. Only bodies, not wicks. So that was a bearish order block. So if for shits and giggles, let's extend that out to see exactly how this thing reacted at that level. All right, so if we were to get rid of our most recent order block, we're not there yet. We haven't broke out. And we were to put this order block and extend it out. All right. Do you see how that rejection was exactly at the 50% line throughout it? That is major. And do you see how this candle wick? Exact rejection was at this candle wick. So on something like this, that's where the order blocks really do matter, is because it's three areas of resistance and support. So above our heads, way up here, we've got the next bearish order block. So those are going to be my target levels: 36, 39, and 44. When I get long-term entries on charts, that's really what I'm looking for, okay? And I don't like this chart in general. I think this was a terrible example. I'm going to pull up another chart, and this is a great chart for it. Here we go. Let's do this one. All right, so what are our rules? Let's review our rules that we've talked about, okay? Rule 1, bearish order blocks are built on green candles. Bullish order blocks are built on red candles. That's 1 and 2. All right, right there. And then you will never have bearish order below you unless you're in the order block. You will never have bullish order blocks above you unless you're in the order block. I'm a visual learner. That's why I type this stuff. I think it's really critical to have it like right there to look at when you guys rewatch this video. All right. And then midline is critical. 70 of 70% of order blocks invalidation will come back to retest midline. All right, let's make this white so it's easier to be seen. Let's make this big. There we go. All right, so there's our rules, kind of where we're at so far. Bearish order blocks are built on green candles. Bullish order blocks are built on red candles. You will never have a bearish order block below you unless you're in the order block. You will never have a bullish order block above you unless you're in the order block. Midline is critical. 70% of order blocks, once invalidated, you will come back to retest the midline. This is where it's a mix between standard deviation and, you know, a lot of ICT in there. I don't like all ICT strategies, but the ones I like, I live by. Like fair value gaps, we'll do classes about all that stuff, all right? All right, so back to this chart. And then the higher the time frame, the better. Here, I need to put that rule. All right? Note, every order block test must be on same time level. You can trade a chart on the weekly, even though it's a monthly order block. But when we're testing that order block, the invalidation's only going to be on that same time frame. All right. So on this chart here, we're on the monthly. We could start with the weekly, and then if it starts to get janky, we could start with the daily. And once it starts to get janky, switch to the weekly and see where it all comes together. So where are we at here? What do we want to identify through this? You know, like, and this is where the higher time frames are more important, especially with a long-term trade. Again, it's what's your purpose of the trade. So let's look at these couple areas here. All right, so on our way down, where are our bearish order blocks that we're going to be approaching? So if we have this big red candle here, all right, and then right here, we ended up fully breaking through that candle. And again, it's only bodies, no wicks. So this is a bearish order block right there. It needs to be very precise too, okay? If we use a magnet tool right here, little trick. If you use a magnet tool, it's going to automatically go to those wicks. Oh, hold on. There we go. Oh, all right. So that's a bearish order block here. Okay, but wait a second. We also have a bearish order block here. Pretty much every white candle can be an bearish order block once we lose it, right? Isn't that our argument? Sure. That's when we want to go to a couple different things. A is we want to make sure that we are on higher time frames so it doesn't get confusing, first of all. So at this point here, we want to go to the weekly and monthly. We really want to see where those true levels are if we're in a long-term swing. And I will hit up day trading order blocks too in a minute here. All right. So here's our monthly. And we have these two dailies. We're getting all confused. What's going on? Oh, on the monthly, we have no order blocks there. So is it really worth even having this? No. Nope. Let's check the weekly. Is there maybe one that's worth it? Let's check the weekly. All right. Okay, so we have one really decent order block here that we're actually just now sitting above. So this is pretty important. This order block we had right here is technically invalidated. Oh, what does that mean? What was our rule? 70% of the time, we're going to come back to that midline retest. We invalidated on a weekly time frame, which is the order block we drew. We invalidated it on this candle. We closed above it. So what does that mean? It's telling me I would be very, very confident that shop might come back to the midline. We might come back to $66, $67 on shop before our next leg up. You know, is our top line going to hold up? Are we going to hold up at the top of our order block? It's invalidated, but I don't want to necessarily delete it yet. I want to see if we come back and test that midline. Also, what we know is on this uptrend, there's no red order blocks below us other than the one we're still sitting in. So any red order block you have below you, delete. They don't. They're fake. They're not real anymore. We've broke them out. So here, what do we have next? Oh, we have this really tight one, and these are the ones I really like. All right here, because this is a very concise range that we're going to expect to kind of trade on, because this order block is tight on the weekly. All right, so we've got that. I'm making this a 1 point, so it could be super concise. So we like this because on this one, it's going to be very, I don't like this thick line here. There we go. This one's going to be very concise. So that to me is our target. Yes, support and resistance levels too. But these order block levels, this is where the algos are going to pull us to. So on our chart here, oh, we already broke through that one. I'm an idiot. Sorry, guys. I didn't realize that candle broke through it. Actually, we haven't. Yeah, we did close a weekly. And we retraced the 50%. All right, so this one's invalidated. Sorry, guys. I'm winging it as I go here. But though, you know, and then what else do we have? So honestly, our next order block is until up here on the weekly chart. All right. And this is reasonable. On this chart, the weekly is reasonable to use because we're not stacking 9,000 order blocks on top of each other. You're not going to put order blocks on an hourly chart for swing trades. You know, you don't want all those order blocks stacked on top of each other. So these are reasonably the 2 order blocks we're looking at. Because remember, any bearish order blocks we had back here were invalidated when we broke above them. So the only order blocks in play are from the most recent move. Our only bullish order blocks are from here up, and our only bearish ones are from here to here. Does that make sense, guys? I hope it does, because that's one of the big ways that you can clear out, keep up with it, those type of things, you know. So now, so we were on the weekly, we tried the daily, it was chaos, we tried, and then, so now, all right, so what about short-term trades? What about day trading? Can we do this on day trading? Sure, let's put the SPY on. Now, you never want to do order blocks on a 1 minute. I'm just going to be dead-ass serious here. I would suggest the 15-minute, and simply for levels. So on the SPY, because remember, the way that we keep this from being chaotic is by remembering once we break higher, those bearish order blocks are invalid, and once we break lower, the bullish ones are invalid. So what do we got here? What are we looking at for order blocks on the SPY today? All right. Oh, well, we have a bearish one here. So we have a bearish order block sitting right here on the 15-minute. So those are the 3 levels within that block on the 15-minute chart. The 3 levels we give a shit about, all right, are going to be, and they want to be exact. You want to be exactly on it. So this is our order block. So when people talk about order blocks, yeah, you can talk about the big order blocks as far as orders waiting to be filled when there's 4,000 shares scheduled to be filled at $400. You can call that order block too. This is algorithmic trading based order blocks. Okay. So in here we've got the bearish order block sitting above our head here. So these are our levels that we're going to expect that resistance. So you'll be surprised if you go back and test this. Maybe we break this wick high. And we went just above it and the wick ends up here. Like, you know, really test it out. And obviously, as far as bullish order blocks, they can only be below us. And the bearish order blocks can only be above us. And I do not use pre-market levels for order blocks. I do not do it. All right. But if we look around and we really look at what the heck is this? If we really look at it and we you know, so also right here is going to be a bullish order block. All right. Because we have the body of the candle. And always turn them red and green or you're going to get so confused, guys. I strongly suggest red and green. All right, so this is the order block here. I'm stretching out because I'm terrible at drawing this. All right, so there's our bearish order block. Okay, They're bullish. So we've got that bearish order block. We've got that bullish order block. I'm not using pre-market levels at all. All right. So we've got those 2 order blocks we've already identified. I'm going to delete these lines. I don't know why I drew them. And then, you know, as you go, you can continually draw these. So we know above our head, it can only be bearish order blocks. And we know below our head, it can only be bullish. So right here, here's a bearish order block. And this on the 15-minute. And if it starts to get to be too much, switch to a longer time frame. The longer the time frame, the better the order block is. So if we draw all these, and would you look at where we hit resistance today? Right at the bottom of that order block. All right. So identifying those order blocks. And, you know, oh, this is supposed to be red, though. Sorry, guys. Who has questions, please? I know this is like a complex subject, and there's so much more to it. This is just the first of many kind of, you know, classes on this. So there's our bearish order blocks we have. And then we have, of course, another one here. But that's pre-market level, so we're not using those. We won't count those. But if we look, okay, but there's also a bearish order block here. Pretty much every time there's a structural switch, we end up with an order block. So we have one here too. Yes, we do. So when we have these 2 on top of each other like this, what do? Let's go to the hourly. So on the hourly, we actually have this one. Because if the order blocks disappear on a longer time frame, they're not strong order blocks. And I hope that makes sense to you guys. So we have this here on the hourly. There's an order block, a bearish one right there. And bullish can only be below us, remember. And then as far as below us, I'm not using pre-market levels, remember. All right. But below us, we have right about this level here, but it was, you know, it was pre-market. So I'm not even using that. So, but these are levels you can use as far as structure goes, in general with order blocks. And remember, whatever level you drew it on is the only way it'll invalidate it. And then when we have a lot of chop, what we like about a lot of chop is the order blocks. There's not going to be too many order blocks because every time we break a low or a high above it or below it, it loses that structure. And it's just, no, ICT shit isn't the worst, KT. ICT strategies are actually, he's the worst. He is the worst. But part of his strategies I use in my everyday trading. So, all right. So that's kind of the main, you know, basis of order blocks. And I really like it for identifying the levels on kind of a choppy chart. Let's just look at some longer term charts and we can really see what I mean. Like with higher highs and higher lows, when we have, you know, these charts like this, like right now, we just made a bearish order block on snow this month. Well, if this month closes below it, technically the month needs to close first. So it's technically not quite an order block yet, but it's given us a very heavy resistance. And the midline matters because that's the standard deviation level. And you know what though, KT? ICT sucks at explaining it in a digestible way for people. What have I said to you guys since the day you met me, most of you? I have said that people like to teach things in a way that makes it seem like it's harder than it is, because then you're going to pay them more money because it's you're going to keep coming back because you can't grasp it. You know, like I can literally teach you guys harmonics in super simple levels using just a fibs, but harmonics is trash. Everybody else is going to, you know, try to teach it in a way to make themselves feel smarter. Sorry, I'm still recording on a YouTube video. I need to stop with the with the slang. But anyway, so, you know, that's pretty much it. And this is specifically order blocks as far as candle action. This is not these order blocks. If we go to Weeble, all right, and we look at SPY, and we're looking through the time and sales here, all right, and we've got if we had a massive, I wish I could find one with a massive order block sitting within the level we're at now. Let me look at Tesla. All right. No, only 3,400 shares. Nothing to say. All right, so 3,400 shares at $171. It's like 340,000, actually like 600,000 right here. This is a $600,000 wall at 170.80. That's an order block too. So at 170.80, we have a massive buy wall. And what does that mean? And people get confused about this, and it's right on our line. If this is a massive buy wall right here, all right, and this is why a lot of people think that the bullish order blocks are buys and the bearish order blocks are sells, and people get really screwed up on that. And it's not necessarily true, because what happens? If we chomp through, all right, 3,400 times, yeah, this is like 600K sitting right here, all right? If we were to chew through a 600K buy wall and keep dropping, that's going to propel sell-off harder. So what we like with buy walls and sell walls is we like seeing them come up. Say we had a 1 million order right here, a million sell right here, and we pop right through it and we eat it up quickly. That's going to trigger uptrend. So it's a wall until you hit it. And when it starts to act like resistance, sure, it's a wall. But once you push through it, it propels you that same way. That's why it's really important to understand how to read that second level in that way. Oh, yeah, there's too much. If you were to put, Doge, ICT, fair value gaps, order blocks, the 5-minute rule with fair value gaps, everything on your chart at the same time, it can become overly complicated. And that's why I like to say, you know, go up time frames, find the ones that make sense, do that type of thing, you know. But I'm going to end this video on YouTube. Thank you guys, everybody. That was just a kind of super quick how to identify order blocks on larger time frames and utilize them. In future weeks, I'll go over it more in depth, of course, but that was just a quick overview. Thanks, guys. Bye.